We're coming to you from the offices of Teeple Snyder Newsom, and for the first time we've got Renee Newsom, the N of TSN, with us. I know she is thrilled to be on camera, right?
I am not. I do not like to do that. But I'm here.
We did get some feedback last time. One of your clients and your husband requested it. In fact, Jason, I'm looking at you. You made the comment, I'm tired of seeing these two ugly guys on camera. So we had to bring on Renee, if for no other reason. So welcome.
So I'll make my appearance and then I'll go back.
Yeah. Well, there's been a lot of uncertainty in the markets, a lot of volatility. How have you and your clients been experiencing that?
A lot of phone calls, a lot of conversations, right? Just surrounding kind of what does today bring, and even just looking at the fact that every day is a new day. And I just sort of say there's quite the benefit of like the long-term horizon. We keep our focus on that finish line a little bit more than just kind of what's happening today.
For sure. Well, for the first time in my career, I've talked more about tariffs than almost anything else.
Right.
Tariffs have just not been a big thing until recently. And I know with the economic activity that has caused and the volatility in the stock market, there's a lot of people that are they're nervous, which is understandable. And I was thinking through one of my favorite passages of scripture. In Matthew 6 on the Sermon on the Mount, Jesus talks about money and anxiety. And I remember this when I was a little kid. My parents had a scroll in their kitchen, one of those little, it hangs on the wall and you can scroll it up and down. And there was a verse, Matthew 6:33, seek first his kingdom and his righteousness, and all these things will be given unto you. Now at the time, my name is Matthew. I loved that verse because it was my name, and I would, anytime I'd come into the kitchen, I'd scroll to that verse. But it has had, especially for a financial advisor, that verse has had significant meaning to me, because Jesus starts talking about that you cannot serve two masters. You cannot serve money and the Lord. And I think part of that is just the worry nature. And in it, he says, and why do you worry about your clothes? See how the lilies of the field grow. They do not labor or spin, yet I tell you, not even Solomon in all his splendor was dressed like one of these. If that is how God clothes the grass of the field, which is here today and gone tomorrow, is thrown into the fire, will he not much more clothe you, O you little faith? So do not worry, saying, what shall we eat, or what shall we drink, or what shall we wear? For the pagans run after these things, and the heavenly Father knows that you need them. But seek first his kingdom and his righteousness, and all these things will be given to you as well. And that's so true. That is so true, that we're going to be taken care of. And we cannot add another day to our life
or hour.
through worry.
That's right.
So that would be the encouragement I would give to anyone, is to focus on the Lord and the trust in him, and the money issues are going to take care of themselves. That said, we're human, so we're prone to worry, and there's just been a lot of uncertainty in the market. What have you seen specifically just with trade policy and tariffs? I mean, what type of questions or concerns have you been
Well, I think the first is really just, truly speaking to us, just the uncertainty, right? It's just kind of what's been proposed versus where things will land are really two different areas at this point, right? Of what we're proposing. I kind of compare it a little bit for maybe a bad parallel to if you're going to sell your house, like you're going to be the one that's going to list it as a higher price, right? The buyer wants to buy it at a lower price. They're going to come in and then they're going to say, I'd like to do a lower price for that, right? And somewhere in the middle, things settle. Now, with tariffs, we're talking about a much bigger sort of gap there. I recognize that. But when you look at the two in comparison, somewhere in the middle is where it's going to land. It's hard not to feel like we have a crystal ball to be able to know exactly what's going to happen there. But when we look at that and sort of we take the idea and you honestly compare, you know, when we look at scripture and the do not worry and every day looking at controlling the controllables and kind of what do we know today, which may be different tomorrow based on maybe a tweet, maybe a post, we don't know, based on, you know, or what China does, because we saw that just happen in the last couple of days where they've put a 90-day pause and then obviously tariffs reduced. So when I look at those things and compare the uncertainty and then kind of where we're going to land, we control the controllables, we understand what we're doing, we keep that long-term focus and the diversification, and allow for then kind of a best case scenario for what we do have the information for today.
Really like that analogy you used on the real estate, because it certainly does seem like our president might be negotiating. One of the things that I have wondered is if tariffs are not his end goal, but more so his means to an end goal.
I would agree.
One of the things that he's talked about is just the unlevel playing field between the U.S. and our trading partners. And if you look at what we are charging other nations, tariffs coming into the U.S. versus what they're charging us, it's not a level playing field.
Okay.
You know, if it was we charge them 5, they charge us 5, okay, that seems fair. But almost every trading partner we have, and we've got a graph in one of our most recent economic commentaries that speaks to that shows that it is not level. So from that standpoint, if we can negotiate some better trade policy, that would be favorable to the U.S. Clearly, the longer we go, if tariffs are going to be here at the level they're being proposed a year from now, probably wouldn't be a good thing.
No, that's right. Yeah.
But we've already seen, you know, even since the time we put the commentary together and filming this today, there has been significant movement between the U.S. and Great Britain. Like you mentioned, there is a pause on the tariffs that are going into place with China. And I always kind of laugh about the China one where it escalated, where I think the numbers were 145 and
yes,
125.
that was the latest that I heard too, and then down to 30 within this 90-day pause.
And you're a parent too. I almost feel like I've gotten into a place with my children where they do something and, oh, you lose your phone for a week. Oh, you mouthed off to me. Now it's a month.
Yeah, like,
now it's the rest of your life. Like,
yeah.
I kind of feel like that's what President Trump and China were doing back and forth. They got to a point that it was just almost laughable. The problem with that is there has been real economic happenings. One of the things was if you're an importer and you want to front run and beat those tariffs before they come into place, you're going to import as much as you possibly can and stock up your inventory before the tariffs go into effect. And what we saw is the trade deficit, which President Trump wants to eliminate. Trade deficit actually went in the opposite direction. It was the highest trade imbalance that we've had ever in our nation's history in the first quarter. So much so that the hit to GDP that we took pulled us from an otherwise, you know, low growth. It probably would have been in the mid 1% range down into the slight negatives. Now, that can't be a permanent phenomenon, right? Because if the tariffs do go into effect, there is no more front running. So I tend to think that is probably a temporary thing, but it was a real economic event. And then those headlines hit the news and people you know, buy and sell shares of stock based on how they're feeling. We're emotional creatures, but
you know, even with the tariffs, you know, President Trump, from years and years and years ago, you know, as a young, I would kind of call him a young boy, that was something that he referenced as being an imbalance and not a fair trade policy. So it's something that's been on a radar for a very long time. And even thinking about sort of now, it was part of the platform he ran on. So in some respects, it's not a surprise that we are where we are with tariffs at this point. But I think the surprise and kind of that level of uncertainty that the markets are facing is the fact that nobody really has a gauge as to what we can do with that. There's not a number that's as accurate. I also compare it, like when we look at businesses, they can't forecast earnings accurately because they don't know that number. And if businesses can't do that accurately and look at earnings, then your shareholders and investors, well, they get a little nervous because they don't know really at what level is going to impact the companies that they're investing in, right? And so then you just get that level of uncertainty that just ripples into the market that people just make sort of these kind of knee-jerk reactions, and then we feel that. So, and we know if the one thing the market doesn't like is uncertainty. And so right now we're just in a I don't even think we could really come here and say that we're experts on it, but really just to rather say it's certainly something that is on our radar daily, like not even, maybe even hourly in some cases. We've seen a couple of tweets in the afternoon that have really even changed the trajectory of the market for the day, you know, just even kind of with a 2:00 tweet. So
well, the two biggest up days of the year was on April 9th when Trump first put the 90-day pause on everybody but China for the country-specific tariffs, and the market shot up 10% in one afternoon. It was the biggest up day since 2008. The second biggest day of the year, and I don't know the date, but it was when the announcement got made
Again,
that China and the U.S. were on pause and they were rolling back the tariffs. So the volatility in the market certainly appears like it's very tariff driven. We had seen coming into 2025 a lot of normalization. If you go back, if you watch our videos or read our commentaries, we talked about that over the last 2 quarters, that a lot of things that had been out of whack were coming back into a normal range, where then we could get low economic growth in the 2 to 2.5% range, which would drive corporate earnings, which could drive stock prices. Where we sit today is actually, surprisingly enough, it's about where we started the year in the stock market. It has not been a smooth ride.
It has not.
We went up about 5% in the first 6 weeks of the year, and then fell 20%, and now we're back about to even. So what would you tell your clients from here? What's the tried and true strategy?
Well, and I think what I've noticed is really, because I've had a lot of questions, right? Should we have sold? Should we hold? Should we buy more? And when you look at the different things with the consumer sentiment, the investor sentiment, and sort of stack all these things up together, it almost has a feeling then of kind of being a day trader and trying to almost time the market of when you think some of the, the tariff details will be released, or if the trade policy will sort of lighten, or, and so in some ways it feels like we would almost be chasing our tail in that, right, with this sort of day trading feel. So really the idea of, even with our diversification and looking at kind of that long term, when we do have those rebounds that we see and those upticks in the market, kind of looking at the benefit of where those funds are. When we see the downturn, like what are those funds that are sort of holding up or insulating that portfolio? And again, not making really sort of these knee-jerk reactions any which direction, quite frankly, whether it's to buy in when it feels, like it's at a high point and it's exciting, or selling off when we get a little bit worried, but rather to almost do the opposite, right? Be fearful when others are greedy, and greedy when others are fearful.
Hey,
so you've heard that before.
I love that one.
Yes.
Absolutely. A diversified portfolio stands the test of time, and just this year we've seen international stocks pay huge dividends. I mean, some of our international holdings are in the double-digit gains this year, which doesn't make intuitive sense in a global trade war, which just proves that you shouldn't try to time the market. But international stocks have added positive value. Bonds have certainly added positive value.
They had a short blip there for a couple of days, I think. I think it was a couple of days, but then so then still holding kind of a tried and true on an income for clients. I think the other thing too is I kind of compare it to like a guardrail, right? It's kind of keeping within the guardrails, so like knowing what you do know, and again, kind of looking at the diversified portfolio, at your wins, looking at those sorts of the recommended funds that we've looked at, things that we've talked through, and really understanding kind of where that makes sense to continue. Again, long-term horizon, because if we get into the timing of the market, again, one tweet could change that in a couple hours, and so we don't want to sort of be resting our laurels there.
Well, business cycles have been up and down for centuries across the U.S. and other countries. That's just the nature of the economy and investments. So volatility is normal. That's in fact why we get paid to be investors, is to take that risk but make prudent decisions. Investing in stocks over the long term has always been an incredible wealth creation tool. So again, don't panic. Stay the course, rebalance, buy on the dips. I
also, though, see I think for a lot of clients, and I think a little bit from us too, is coming off of COVID, that's still a fresh enough wound of almost a sort of what felt like a manufactured level of volatility to the level that we're effectively feeling like we're seeing now. And I think maybe that's just a little too fresh. That I do think, and I understand or empathize with the fact that is still something that I feel like people feel and remember in their portfolios. It's not something like we can say, well, back in the Great Depression, it was like this, or my grandmother told me this, but that was a very real feel for a lot of people. Or maybe 5 years ago, they were not at the point of retirement. Now they are, and now this is their sort of COVID decline or their COVID volatility. So I tell my clients actually all the time that I look at my portfolio daily, which I don't recommend, but I do it for 2 reasons. One, as your advisor, I look to see like my portfolio, and I want to feel what they're feeling. So if the market's up or down based on the previous market close, I want to feel what you're feeling. And so I want to sort of understand, where you're coming from, right? Sort of what that emotion that is elicited. But the second thing is, would I do anything differently myself? Would I do anything differently based on the recommendations to what we say here and what we're talking through, but also in my own portfolio and what we would do? And I very much, we preach it and we talk it because we walk it, and that's where it comes down to, is keeping that focus.
Putting in another quote, Dave Ramsey always talks about the only people who get hurt on the roller coaster of stocks is the people that jump off. And can you imagine?
That's right.
You mentioned COVID. The market was down, by memory, 30-40% in a month, and then it took only a few months to fully recover. So we are not panicked. You shouldn't be either. But we are happy to address any questions that you've got. I know we'll throw up our website and contact information. Renee, thank you for making the drive from Louisville up to Brownsburg to share your wisdom with us. It's a pleasure serving all of you.